Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. And rolled on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you guys buy it. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Go back tomorrow and I'll lose it all. Should be fine.
Good morning, everybody. It's Tuesday. I am like way disorganized here. So hold on. We're going to get some retail inventories here in about a minute. So let's just stick on this page here for a moment. Let me drink water here. Does that make it better? Oh yeah, that's way better. I'm hoping by the end of the day that my voice completely clears up. Reggie, welcome. Hey, you're not here bright and early. Good job. I'm not on time technically. Should be here 10 minutes earlier. That's okay. I don't plan on taking any trades off of this news or anything. We're expecting wholesale inventories month over month of 2.1%. If it's higher than that, I don't know. It could be very interesting. Could be very interesting if it's higher than that. Higher than that could suggest a deflationary force coming into the market, right? Okay, so we're getting good trades balance, 104.3 versus an expected 105, so that's good for the currency. Okay, wholesale inventories go 2% versus an expected 2.1%, so pretty close to in line with expectations. Let's come over here to our volume profile. So treasuries continuing to push down. I think that late last week that the market kind of made a little bit of a impulsive move saying, okay, well, the Federal Reserve is going to back off because those inflation expectation numbers weren't quite as bad as we initially thought that they were. But the Federal Reserve has come out later and said, well, you know, but it's a bunch of different things that are going on that suggested we need to increase 0.75. So they've been giving up some of those gains, right? And we're pushing down at the moment. We're pushing down, but just realize here in the treasuries past week or so, we've been having flows both ways, right? And there does appear to be some sort of buy rebalancing in the treasuries. So keep that in mind. In the S&P 500, and not too moved from yesterday. I'd say mostly sideways over there, but they sentiment seems positive. Okay, just reading the morning synopsises and everything. Oil making a move up, not able to quite get to 100, pushing up again this morning. Gold and silver coming back down. The lower end of the range, although mostly sideways, has been a boring trade. Copper maybe turning around in copper. We come over to the dollar. The dollar is seeing a little bit of strength. It hasn't moved too much off of this news yet, but it has seen some strength this morning. And Bitcoin toying around with the 20,000 levels again yesterday and finding some relief. And we continue to get headline after headline in the Bitcoin world of severe bankruptcies and all of that sort of nasty stuff. So, man, I'm a little disappointed. My voice is just not quite what I thought it would be this morning. Well, let's check Discord. So I feel bad. I've been letting Discord down a little bit. And so I need to be posting over there more. But yesterday I did so much work trying to get the moderation under control. I think I finally found something that really kills the spam. Like, we got attacked by spam so hardcore yesterday. Anyways, so let's see here. I think the market could be in a place where maybe we get some opportunities, but there's nothing like super clear. So it is gonna be a difficult trade, probably. Yeah, there could be opportunities, but not a lot for me to try and make a move. I think that I would probably prefer to sell the treasuries, just given the momentum. But surely there are going to be some buy side movements. Now, just note, we did kind of have an attempt at higher there that kind of fizzled out. So the sellers might take over here. It's just not a very good spot because we're kind of on the edge and in around a price that often has shenanigans. So, okay, well, they just completely pulled out of the way there. Bids just completely let it fall. Ooh, the latest Quant Minds magazine is out. Let's put that in our... Yeah, open this right here. No, we need to move our chart over to here. There we go. All right. Markets and the Fed are both watching closely for the probability of a recession, but disagree on the probability, reports Steve Liesterman. I love that guy. He's a smart cookie. The bit Chicago, have you ever thought about suicide? What? But then I go to the poll, it doesn't give me any options. That's interesting. Did you waste your life? Oh, jeez. You saying traders are suicidal? Iran finally managed to impose its trust. No, it is the Londoners. Listen. Oh my gosh, this whole thing. This is a dress code that started really like before my time, really. So I'm gonna say like just around 2008, maybe. Okay, Williams is on CNBC. We might get a move here. A recession, not his base case. Anyways, this is a thing that kind of started in London, and it was like, well, if you wear a full suit, you look too formal. But if you don't wear the suit and you just wear a tie, then that doesn't look very high class, snazzy, whatever. Doesn't look very high fashion. So they decided to be casual but still high fashion, to wear the suit coat and not the tie. And this became very popular in the financial world, particularly in London. And you're now seeing world leaders starting to do it. So I harped on this when Andrew Yang was doing it, right? What are you doing if you're a Democrat? wearing this. You're wearing the uniform of the enemy. This is the uniform of the globalist elites, not of the working class people, right? So it's interesting that now all of the world leaders have basically moved over to that dress. I know it seems like a trivial thing, but like just little things like that could tell you a lot about where culture is with different groups. So since I don't know what Williams is going to say, I am not going to take a position here. No way. Maybe if he says something significant, though, it could give us something important to trade off of. So let's stay frosty. What the fuck? A centralized yield service, CoinFlex, gave a $47 million uncollateralized loan to someone who can't pay it right now to fund other customers' withdrawals. They are now turning his debt into a token and selling it to people, offering 20% APY on it. Amazingly degenerate, right? Okay, like here's the thing. You don't have any of the money, so you keep offering people 20% return. So you just put yourself more and more in debt, right? This is not going to end well, guys. Williams says the nominal neutral rate is higher. Yep, he's right. We need to get real rates above zero. Yep. Yep. You can't sit and let everybody that is in that's on fixed income lose money for year after year after year in a high inflation environment. That's not okay. That's going to have big problems to your currency in the long run if you don't do something about that. Prime Minister Draghi, there are secure corridors to export cereals from Ukraine. Okay. Okay, the big short is back for traders betting against the Bank of Japan, says Bloomberg. Betting against Japan's central bank has yet to pay off. Investors think this time is different. Read the big take. Yeah, we should read that. Hey, we have a Bloomberg web subscription for a reason. Let's let it pay off, huh? Hopefully, talking enough will clear my vocal cords, but we'll see. In Tokyo's financial circles, the trade is known as the Widowmaker. And while it has done nothing but saddle young cocksure investors from London to New York with crippling losses over the past 2 decades, ergo the name, they're lining up once again to take a shot. The bet is simple, that the Bank of Japan, under growing pressure to stabilize the yen as it sinks to a 24-year low, will have to abandon its 0.25% cap on benchmark bond yields and let them soar, just as they already have in the United States, Canada, Europe, and across much of the developing world. The stakes are high. A surge in rates in Japan, home to millions of savers who invest in bonds around the world, would reverberate quickly across financial markets. Yields nearly everywhere would dart higher still, analysts say, pushing up borrowing costs for companies, consumers, and governments, and heaping stress on a global economy that's already begun to sputter under the weight of soaring energy prices and snarled supply chains. In other words, it is a risk with severe downside to it if it happens, right? What's more, on a broader level, a loosening of the Bank of Japan yield cap would signal something much bigger, an end to the global era of ultra-low interest rates. Japan was the first to usher in this period back in the 1990s, years before any other country, and today it's the lone holdout, clinging desperately to a policy that its central bank chief, Huakiro Koruda, says is needed to bolster an economy that's been mired in a funk for decades. You don't think that you do that for decades, that maybe it's the policy that's causing the problem and not, maybe it's not helping. I don't how do you hold a policy like that for that long and not question it as kind of crazy? The 5 years seems to be reacting a little bit more here, but they haven't fallen out yet. Not quite yet. Right on the edge, though. Japan is looking increasingly out of line with the global environment, said Arjun Vish, a portfolio manager at JP Morgan Asset Management in Hong Kong. The Bank of Japan will have to adjust the current policy framework at some point, he added, as the tumbling yen and rising import costs squeeze businesses and consumers. Farage says he's been betting against government bonds known as JGBs. So too are Schrodinger PLC's Blu-ray Asset Management and Critical Asset Management Asia. Japan is the one market that's telling us to go short, said Kelly Wood, a fixed income money manager at Schroders, which oversees $1 trillion. Wow. Blu-ray chief investment officer Mark Dowding recently called the Bank of Japan's so-called yield curve control untenable, while Adam Levinson's Graticule said in a May investor letter that Japan was one of its top markets for shorting global rates. I wonder, you oversee $1 trillion. That's a lot. I don't think that you really deal with a bank when you yourself have $1 trillion, right? It's blow my nose. I think some of the largest U.S. banks are maybe up to 10 trillion now. So 1 trillion is a lot. Market strain. As the wagers pile up, they're starting to put a strain on the more than 1 quadrillion yen Japanese bond market. Futures were brought to the brink of a trading halt on the 15th of June as 10-year securities slumped the most since 2013, while 10-year yen interest rate swaps popular with international funds have blown past the central bank's 0.25% line in the sand. One of the clearest signs yet that the traders are convinced that Japanese authorities will be forced to capitulate. In the cash market, overseas investors sold 4.8 trillion of Japanese bonds in the week through June 17th, the biggest weekly outflow in data going back to 2001. I'm surprised that I haven't seen more downside in the treasuries from this sort of thing. I mean, we have seen some downside, but I don't really remember any days where it was like, oh man, like the yen, crazy stuff happening, and that's why the bonds are reacting this way. There's a second camp that's betting against Japan through the currency market. They borrow the yen and sell it, hoping to drive it down in the process, and then buy bonds overseas to pocket the yield differential, because the Bank of Japan policy shift would likely cause the yen to surge in the immediate aftermath. Yeah, it would. That's an interesting trade because it's not short the currency, right? This is, according to Edouard de la Legland, founder of macro hedge fund EDL Capital, the real trade in Japan. In spite of all the market pressures, Kuroda has held firm, insisting that the central bank's most recent gathering that it's too early to cut back on monetary easing with Japan's economy still sputtering. No, because otherwise you're going to get inflation. Inflation, while breaking above the central bank's 2% target for the first time since 2015 in April, remains far from entrenched mid-tepid wage growth, he said, as the Bank of Japan looks to move past its years-long effort to ward off deflation. He also tried to brush aside suggestions that the central bank's yield cap is under threat, boosting bond purchases to historic levels to defend it. We can maintain our yield curve control even if yields rise abroad by buying as many bonds as needed, Kuroda said earlier this month. Okay. Central bank has already accumulated around half of the government's long-term debt. Yeah. When you own more than 50% of the nation's long-term debt, I really kind of like, okay, I don't know what the effects of that are. It doesn't sound like a good thing to me. That sounds crazy. In the process, the outgoing Bank of Japan governor is setting the stage for further monetary policy divergence with the Federal Reserve and other central banks. And then they go on to talk about how this trade never works. And people lose a lot of money on it, so should be skeptical of it. Shall we see what's in the Quant Minds magazine? An exclusive session with Jesus Rodriguez from Quant Minds Edge Alpha and Quant Investing. Silvela Borokova, Maria Khalife, Marcos Costa Santos Carreria, Paul Edge, David Seelman, JD Opike, and much, much more. Oh, I need to log in. I'm not in. Log in to access. I clicked the button. Okay, there we go. Treasury is falling to the lows there. Possibly a break. Let's see if they get some, I don't know. The order flow here, well, there you go. Tick back up. Order flow here does not look like a breakdown to me, but rather bids and offers are kind of pulling around. So I don't really like that action. Mm-hmm. Here we are. By the way, I forgot to mention at 10 o'clock Eastern Time, CB Consumer Confidence. Important number. Mm-hmm. IFF training. What does that mean? Looks like a credentialing program for people in the industry. Then promotion. I didn't get very. It wasn't. So I've read that in the past, and there's been good stuff from. Goldman Sachs sees losses above 1.2 billion from its consumer push. That was at 611. Oh, I missed that. They doing really poorly right now. Magic One, good morning. How are you? And they probably have been underperforming the market because they haven't. My portfolio hasn't been doing so well. Oh, okay, it actually is not terrible. They are underperforming the market year as of June. Now they have outperformed a little bit in 2021. Oh, since 2021. 2022, they're underperforming a little bit. Nothing terrible, and they are up over the past few days. So that's probably a headline that's already priced in. Forex Live, give Kramer credit. He can throw a dart. I like Larry Summers. Oh my gosh, wait. So he's about to quote Jim Cramer here. I like Larry Summers, but on the humility side, he's not that strong. That's true. That's true, though. Larry Summers is not humble, but you know what? That's because he's one of the smartest minds in economics. Like, he's that way because he knows things that other people don't know, and he knows that he knows them and that other people don't. So somebody's retweeting that picture we were showing earlier with the G7 or whatever, calling it the 7 douchebags of the apocalypse. I kind of wonder about that because I'm seeing that from like the far right people, and the far right people have kind of been like playing the fool for Russia. So when I see something like that, I'm kind of like, well, I kind of agree with them on that, but are they saying it just because they're Russian hacks? I don't know. New York City could add thousands of new apartments in just 6 prosperous community districts. Restrictive zoning is the only force standing in the way. Eric Adams, be a yes in my backyard hero. Okay. That should be interesting if he does something. Hmm. Okay, so it does look like they're pushing down still. The flow is not very strong. It is coming in short in the 10-year, but it's still kind of tepid. Kind of makes me a little bit nervous to try and go along with it, even though it is in the direction I want to go. So we are going to be getting some numbers here in about 30 seconds. U.S. House Price Index month over month, they're looking for a reading of 1.5. In the Case-Shiller 20 year over year, they're looking for 21.15. Again, it's considered a release where, the information is already out, so it's not necessarily a huge mover. Okay, house price index is 1.6 versus the expected 1.5. And the Case-Shiller 20 year over year is 21.23 versus expected 21.15. So both of these numbers roughly in line, although a little bit above the expected. Interesting that the Treasury's here moving back up. Maybe just trying to avoid that news. I don't know. Yeah, that's actually back to 16.5 is actually quite odd. I am seeing a little bit of a decline in the dollar as that happens. Japanese yen, not really moving too much. Gold, not liking that. S&P 500, not too bad. You know what? So I had an order in my ES from yesterday that would have gotten filled overnight, but it didn't because I didn't have the DOM open. Come on. I don't think I'm getting my voice back today. Like that coughing didn't make it better. Forbes quote of the day is success is not to be measured so much by the position that one has reached in life as by the obstacles which he has overcome while trying to succeed. Okay. That's by Booker T. Washington. Well, I would rather have a high position in life, though. You sound a lot better compared to the previous few days. I do. And like if I just take a drink of water, then I sound normal, huh? So it's kind of there. Man, they're gonna go all the way to the other side here now, huh? I don't know about this because that move, that reversal down at the bottom kind of just felt like, kind of felt like offers just pulled and they levitated up. Didn't feel like a failure on the downside. But the pace and the timing of which it came up kind of suggested that it was based on the news. And I don't see how that's actually the case. All of the economic numbers that we just had come out there with the house price index and so forth we're all in line with expectations, and it's a release that's usually not very influential because we already have all the information for that one, which is why it almost never surprises, right? So I'm a little weirded out by this move up. We could try fading it, but I think we got to be careful because there has been some, as recent past, some strong buy moves. I don't necessarily want to stand directly in front of this thing, right? Well, let's see how forcefully they go through 20 here. 20 was a new high, touching a new high. Might see a level break set up here. Let's kind of keep an eye on. In fact, let's reset things so we can kind of benchmark it. Interesting. At the moment, at the top of my watch list, the 6C. It's all currencies at the top. Swiss franc, Canadian dollar, euro, British pound, followed by RTY, which is up 0.71 overnight. And then corn and soybeans, which are both up over 1%. Oil is up over 1% as well. Do I not have the main oil on this? Oh, no, I do. It's right there, 1.62. A little bit more activity in the 5-year today. 5-year yield, rather. Are we about to see sentencing for Ghislaine Maxwell? Well, they did bust through. Quite aggressively, I might add. There was quite an acceleration when they went. Kind of looks like they're gonna revisit the scene of the crime, though. Not quite all the way back down yet. Kind of chilling at 21. I didn't. Well, we saw a move in the dollar there. Yeah. Like it looked like it was moving down, and then all of a sudden it moved up. And again, all of the activity I'm seeing is in all of the currencies, but it wasn't the 6J leading the way in this instance. It was like the Swiss franc and the euro, and all of these are weakening. So I wonder. It does seem like that there is some rebalancing flows that have to come through in the, well, not, it seems like I've read that there is a lot of rebalancing that has to happen in currencies, but I don't know which direction. Perhaps it is that it needs to come back to dollars. That seems to be the move right now. And I think that that's what the treasuries are reacting to. The dollar is turning back. So that alone does not give me a whole lot of confidence in trying to ride the momentum in the treasury. I don't know. The dollar could easily come back. It's not normal for the dollar to just really, really strongly trend off of no news, right? Oh man, somebody said something about the Kenobi series on Twitter. I put off watching the last episode. I'm like, this is so terrible. I should stop watching it so that Disney knows how bad it is. But I watched it. It was bad. I really regret finishing it. The ending was so bad. He defeats Darth Vader, of course. Darth Vader lives, of course. We know that because we know that Darth Vader was alive later, right? But how does Darth Vader live? Obi Kenobi lets him live. He beats him, and he's like, "Oh, okay, whatever. I'm just gonna leave now." He knows this madman creating death and destruction across the galaxy, and he's just like, "Well, I'm gonna let you live this time." Whoever wrote that, if you are the writer for the Kenobi series, please do not take on another major writing project like that. I'm not saying like don't be a writer. Like you'll get better, I'm sure, but please keep it to like small projects or your own projects. Don't go and hijack a well-known and beloved series with your terrible writing, because it was terrible. It was terrible. The writer is the writer really a head case? Hold on, now you have to go find out. Obi-Wan Kenobi writer Joby Harold. Who was originally conceived as a trilogy, and we've only seen part 1. That's the that's the headline today that Google is showing me. It was going to be a film, right? And they scrapped it. Writer Stuart Betty has revealed. Oh, he departed the project after the plan for big screen Star Wars spin-offs was scrapped following the release of Solo. Joby Harold was hired as the new head writer of the series. He took my scripts and turned it in from 2 hours into 6. Oh, so that's why there's so much shitty filler. So I did not work with them at all. I just got credit for the episodes because that was all myself. Okay. So really what's going on here is it was an adaptation And Joby Harold did a terrible job, right? Am I right? Okay, so they did come back and they moved through the 20. So exactly what I was worried about. Now the question you got to be asking yourself is, oh, well, so Seth, should you have faded that? Could have made $20, I think, right? I don't think that the risk going against such a strong pop like that is really worth it. So I remain on the sidelines. He executive produced John Wick Chapter 3. After writing on John Wick Chapter 2, he was an executive producer for Edge of Tomorrow. Future adaptation of Space Invaders? What? I don't see many. So a lot of good filmography, but not really television. Spinning Out on Netflix, never heard of that. And Underground. He's been much more the executive than the writer. The things that he wrote kind of sound like meh. I'm upset that they're gonna try and make. I'm so salty about it, aren't I? I'm one of those people now. I thought that was so bad. I was just gonna cry. It makes me want to cry to hear that they want to turn it into a trilogy. Oh man. You just pissed. See that crap? What do you mean? It just like here's what I think that what bothers people is that they see the potential and they see it squandered. I think when I'm on a trade and I see that a trade could have been great and it gets short circuited, I'm a lot more sad than if it was, it just kind of struggled and never really did anything. I didn't expect anything of it. I think that a lot of people have just gotten to the point where they don't expect anything, but I was not to that. I really liked The Mandalorian. The Mandalorian was great. But this Obi-Wan Kenobi series thing was just the most uninspired nonsense. So here's the one of the things I think bothers me the most. The Star Wars has an interesting way of writing, right? There's different ways of doing stories, right? And Star Wars is a lot more like the Odyssey, right? It's like archetypal. Its intention was to be archetypal kind of stories, like that. There's these stories ingrained into us, and that these are different takes on them, and that there are things that we're supposed to get out of watching the movies, even though they're like incredibly campy and so forth. But they're like campy and still trying to be really serious, which is kind of cool. I like that. And So when you look at, like, for instance, the sequels, there was like a message. Sorry, the prequels rather. There was a message behind the prequels. I don't know what the message was supposed to be behind the sequels. It was there was kind of like a message in each of the individual movies, but there was not really an overarching arc, right? Because they didn't coordinate very well. Okay. Mandalorian has some interesting themes in it. I think we have yet to see the biggest takeaways from the Mandalorian, but you know, there's some good stuff in there, right? Like, I feel like that the Mandalorian has a purpose to exist. It seems to me like they're building up the restoration of Mandalore, which is exciting to me. The Obi-Wan series? What is the point of the Obi-Wan series? There wasn't some key lore point that we learned from Obi-Wan's adventures that gave us some exciting insight into the series or something. I really didn't see that. And there wasn't really a solid message to it either. It was kind of like, what the hell was the point of that? Like, seriously, what was the point? I don't get it. I don't get what was the point. I guess I'm too dense. But it just seemed like really terrible writing to me. Really terrible and lazy writing. I don't know. That's what really bothers me about it. I don't know what else to say about it other than that it sucked and that I'm probably going on about this too long. But I blame the writer. I blame the writer. What's this? The fact of the matter is the border is closed, says Karine Jean-Pierre in response to Republican criticism of Biden's border security policies causing death of 46 migrants. Oh, man. Did you hear about that, by the way? They found a truck. They found a truck and it had 46 migrants in it and they were all dead. I don't know if that news story is going to go anywhere, but I read a lot about it this morning. I saw that headline a lot this morning. Star Wars official genre is space opera. Yeah, you know what? We need more opera in popular media. I think that's fun stuff. I guess The Avengers is kind of opera, right? It's superhero opera. I don't know. I need to stop saying that. I used to think a lot of orders stacked above or below price on the DOM would slow price down, but the market orders seem to chew up those levels pretty frequently. Yeah, well, so it's a really an interesting thing because first of all, you got to factor in spoofing, right? So spoofs often disappear, right? Another thing that I see a lot is, say somebody really wanted to sell here and they stacked a huge old fat order at 21. More often than not, what you will see happen is price will run away from it and then that order will chase it down a little bit and then they'll come back to it and fill them. So it's like this guy putting this huge order on there, he never gets the price that he wants. So here's what you got to remember. When you see a large order on the DOM, it's one of two things. Number one, it's a trick. You're meant to see that, and it's meant to cause you to do something that is not in your best interest. Or two, somebody screwed up. They made a mistake. They have to get out. They're chasing the market, whatever the deal is. It's just usually, if you're trying to take a trade, or sorry, let me start over. Okay, slightly different thought process here. What happens is when you get a large trade, it exhausts the liquidity in that location. Okay, this is the key empirical behavior of market. that is very contradictory to what retail traders want to believe. Retail traders want to believe that, oh, there was a big order there. That's absorption. That's going to be the place where we're going to turn around. Or they think, oh, hey, here's this daily pivot level that we know is significant and lots of people are going to be watching. That might be a price at which they bounce off of, right? And the general thinking is it's going to be a price that they're not going to spend very much time at. But what you will find more often than not is that they will start to rotate around that price. That a large transaction taking place basically exhausts some of the market maker liquidity in that location and makes it more difficult for them to get outside of that location. It will rotate around that price. So you're right. Often market orders will chew up those levels pretty frequently. Because if you're a big guy executing, you have to buy 60,000 contracts or you have to sell 60,000 contracts. Some idiot putting 5K out on the DOM, that's a gift. That's a gift. You're going to trade that one. You're going to trade that. So it's kind of like gravity. Exactly. It's like gravity. I don't like this idea that it's like a magnet. It's not a magnet. It's that the gravity pulls them in instead. It's that there's nothing there, so you fall into it. Yeah. So you can kind of see a little bit of that been happening here as they broke out and they rotated around that price a little bit. They fell down a little bit more, but it was brief. They came back and now look, they're rotating around this price again. Like it's a little bit harder. There's not very much liquidity here. There's more liquidity at 22.5, 23, 23.5, etc., etc. If they break out here, well, okay, so they might try and move up. If they move up here and I don't see a lot traded at these prices, that's going to make me be like, okay, so 297, 250. How much does it take for them to take 23? Not too much, but it's still reloading. Yep, and then the price orbits right back. Yeah. Well, these moves that we're seeing here in the treasuries, with the way that I'm seeing the volume run, I am seeing quite a spike in volume in the 30-year, but not the other instruments. So I kind of suspect that's and the one where we initially moved out to new high was from the dollar, right? So what I'm looking for is like strong evidence of a large meta order that is going to have multiple legs. Do we have that? I don't think we do. Like we got some pretty good trending action in terms of price direction. You do have a little bit of autocorrelation in terms of order sign, but the amount of flow that's coming through is very, very tepid. And it doesn't take very much to make it tick up, which isn't necessarily bad. It's just that it's like, okay, do we actually have strong evidence that there's a lot more market buy orders out there in wheat? We don't. And then look how quickly it comes back. So what kind of happened there? They moved so fast that they kind of developed a hole behind them and they fell back into it. Right back into the hole that we had before. Except for that there was a lot of volume at 22. So now I kind of think that 22 could be a more clear spot to rotate around, right? But so anyways, how do you deal with this? Because it's kind of a problem, right? How do you deal with this? So the first thing is realize that there is a decay. So if you get a strong meta order, there's a decay. And the long and short of it is that decay follows the 3/5 law, as opposed to the initial move up follows a 1/2 law or a square root law. So that basically means that it will take 2.5 times the original move to decay, and that comes out to about 90 minutes in the treasury. Okay. So you can time it. You can try and time it with the waves, right? But the second, like, more general rule would be that you don't necessarily want to put your order in when things are getting exciting, right? Because if, for instance, you saw that breakout there and you got all excited, what happened? They created a hole and they got sucked back into it, and you're underwater right now, right? So you want to predict future orders. So you want to look for a place where it's very likely that you're going to be able to predict the future orders in a certain direction, right? And the quieter it is, the better a chance you have of predicting that there's going to be like a future flow, right? Just because if there's activity, like if we were to just make a graph of just like, I wouldn't say like volume, but just like overall activity, right? It's going to be like this. This is going to be like, it comes in waves, right? Maybe this wave is bigger and this wave is smaller. So if you're up here, how likely is it that you're going to get more flows? If you're right here, how likely is it that you're going to get a continued flow? Well, it's a lot less likely than if you get it right here when the activity is low. When the activity is low, you can kind of say, yeah, we're likely to get more activity in the future. I might not know if it's going to be buy activity or sell activity, but if you just time it when it's quiet, that alone is an edge, right? So orders tend to cluster. I just got put on baby duty. Oh, she gave me that because Asher probably gonna whine. So anyways, that's how I would deal with it, is that I actively avoid the big traders. I want to be in before the big traders. The big trader comes in and moves things, and then I get out. And I sell to the big trader. Right? Dog, you're not a cat. Come here, dog. Come here. Don't eat toilet paper. It's not good for you. He's looking pretty good. Yeah, he's grown up, yeah? That's a good looking dog. That's a good looking dog. Don't bite my finger. He's a menace, though. Thank you. This is a Papillon. I have mixed feelings about my dog. He's been pissing me off lately. See, he's biting my foot right now. Stop. That's not a toy. And that's not how you get people to play with you. That just gets you yelled at. Right? Would you like to come and sit over here? Come here. Look right here. There you go. Oh, too bad the microphone covers him up. And he didn't want to sit there. He wants out. Sucker. He just kind of, I'm like, oh, I'm going outside. He goes out, and then I lock him out. That's true. My best trades was always when there was no one in the market and everyone slept when I got. Yes, exactly. Yeah, nope, he's okay. Just a little cough. He looks okay. I just got started with Jigsaw, and doing the cut and reverse drills are really shaking up my past trading education. Yeah. Well, so here's the thing about the drills, okay? You go in and you do the drills. And let's say you did that for a year. Probably you're not going to make money on it, right? So the point of the drills is not that it's some profitable strategy that you get good enough at and you're likely to make money from it. The point of the drills is to be good at executing, right? The skill here is there's kind of different skills, right? Like think about if you were working at a firm, how things would go. If I was working at a block trading group, there's actually lots of different things involved, right? If you're part of a block trading group, you're not the one that's actually deciding that we're going to buy or sell, right? Some hedge fund decided that they're going to buy and sell, and they're contracting you to buy or sell it for them. Okay. So the hedge fund part is a skill, right? What is that? That is the predicting future flows part. That is so important, right? Being able to predict future flows and know which way it's going to go. Today, I don't have that. Okay. Then the next step down is the block trading part aspect of it, right? So the block trading aspect of it is, okay, so they've contracted me to buy 60,000 contracts. What is the current state of the market, and what will the impact that my orders have on the market? So if we know what the orders are going to be, we can calculate pretty effectively what the market is going to do. And what they tend to do, the way that they tend to execute this is they'll make a liquidity hole, and then they'll dump a lot of volume in that liquidity hole. And then when that liquidity hole is decayed, they do it again, and that's optimal execution, okay? Which is kind of the thing that I spend a lot of time teaching you guys. But then there's a final aspect, and that is the guy actually clicking. And like how he kind of times his clicks and stuff, right? That's the actual execution part. And that's the thing that Jigsaw is so good at. I click here, puts an order out. I can move it around, can easily put an order in, get out, stop, limit, whatever kind of order it needs to be. And you have the most flexibility, most flexible, quick, responsive. All of the data that you need to see is right there, right? That's execution. Execution is a really important part too. Okay. And those drills teach you the execution part. And they also kind of teach you, okay, looking for icebergs, trying to catch the edge, right? These sorts of things. They're all teeny tiny little things that kind of help, right? But yeah, for you to say like it shakes up your past trading education, I'm sure. Because your past trading education probably tells you, wait for it to do a higher low and then get in this situation and yada, 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 right? Market doesn't work that way. Market's very statistically efficient. So instead, we're just kind of going along with the flow, right? The block trader, they don't necessarily know which way it's going to go. They just know they need to buy 60,000 contracts unless something crazy happens that totally invalidates the trades, right? I'm seeing a lot more than with daily trend lines and support and resistance. Yeah. I have to say, I think support and resistance is complete nonsense. Markets don't work that way. Because the whole idea about support and resistance is that price is elastic, and financial markets are inelastic. Liquidity, it's not just liquidity, right? I talked about three things. Liquidity is kind of the middle one. You still need to be able to predict the future orders, like honestly. Unless there's three basic trading strategies, okay, that we know of. or rather, they can all be categorized into 3 different categories, right? There are market making strategies, informed trading strategies, and what do we call noise strategies, right? Generally, they call the noise strategies because there's no real sense to them. These people lose money. Overall, the noise traders lose money in favor of the market maker and the informed trader, right? The market maker is a great gig, but to be the market maker, you have to have a big bankroll, you have to be able to take on a lot of risk, and you have to be fast. And it's hard for us to be fast. You can find instruments out there that do it. You can kind of find a little bit of edge here and there, but the market making game is really hard. I say play the informed trader game. Know what's going on. Find some situations where you know that there's something that is going to come into the market soon, and the market doesn't seem to be pricing in. And be the informed trader, right? And if you're the informed trader and you understand how the liquidity works, then you're going to be able to execute much more optimal, right? Because the trades that I catch are usually pretty optimal. When I catch a good trade, it's usually like, oh wow, how did you get like the top and bottom of that and everything? I don't spend a lot of the trades I work. I don't spend a lot of time sitting around waiting in a trade, right? I don't want to see very much adverse excursion against me. This is optimal. Well, what do you think? Do you think that the treasuries are going to move up? The way that it's trading right now, it's kind of looking like an ascending triangle. It does kind of look like that the pressure is still to the upside. It's much more consistent in the 5-year. When I look at it in the 10-year, it's kind of a little iffy in terms of volume correlation. That could be from spreads. The 2 and 10 is kind of not really going much of anywhere, whereas the knob is steepening a bit. And, I was thinking about like what should my next videos be. I do want to make some videos about the treasuries. I was thinking back on like what I had in my other video, because I was started out basically like what is a bond, etc., etc., etc. But I think really what you need to start out with is here's the numbers. Like what does 116.21 mean? Because that's the thing that kind of holds people back the most from trying to analyze the bonds, is that they don't even understand what the prices mean. Right. So I think I need to get that one out of the way. But then I was also thinking about more kind of like videos that would attract a larger trading audience. And I think some of the titles that we could do would be like how much money should you have to trade? I think is a subject we should cover, because I haven't seen it covered very well in the futures trading space. Well, usually it's not futures trading, right? Futures trading, everyone has given an answer to that. That's pretty good. But I think I have a better answer. But my better answer is you want to risk 1% per day. Anyways. There's that. There's the bottle. There's the Asher. Did you give me all 3 of those things? Man. Anyways, but then another one that I think could attract some attention is why price action sucks. Where it would just be price action sucks. And I don't know what I'll have some sort of clickbaity face. And there they're coming back down again. I don't know I don't know what it's going to do here. Be a little worried about the 30-year Pushing all the way back down to 134.12. That could be ugly. The S&P 500 finally filling my orders. Good grief. So the question is, I guess I'm supposed to hold this until the end of the day, huh? Yeah. Even though I've been in it for a day already. Ugh. But I don't know. You guys tell me, are there videos that you think would, you either really, really want to see or you think would do really well? So that's kind of my short list right now. I have a video I think I'll be recording this weekend about KVM switch. It's kind of cool. It's going to be something because I know a lot of people that are, you got a big trading rig and then you got to use it with your work laptop too. And I found that the KVM switch is a worthwhile investment. They're not perfect. They got a long way to come, but they are a worthwhile investment. Not too much activity on Twitter today. Remember, though, we got some numbers coming up at the top of the hour. I'm wondering if this retracement here that we're getting in the Treasury is rebalancing or maybe even people taking trades based on what they expect to see from the consumer confidence numbers. Video about bonds would be great. Again, like the problem with the videos about bonds, one, it's a lot more work, and two, it's a smaller audience, right? But we do got to do it because more of this knowledge needs to be, how do we say, laid out in an organized, video or whatever. And that'll be a good chapter for the book, because basically what I've been doing is I'm writing these scripts. I will take the scripts, expand upon them, and turn that into a book. That's what I think I'm going to do. It'll be an expensive book. It'll be like $100 book, but it will be a big book. And I want it to be a print book. I want you to be able to have this big old honking thing sitting next to your desk. And I want it to be a big old honking thing, which means it's going to be a multi-year project, right? Okay, New York Fed retweets Squawk Box about an hour ago saying a recession is not my base case right now. The economy is strong, says New York Fed President John Williams. I'm expecting growth to slow this year, but that's not a recession. It's a slowdown we need to see because really, we need to see to really reduce the inflationary pressures we have. Gotcha. Video idea about how we as retail traders can use our nimbleness to work around institutional trading. That's good. How would I do that? I don't know. That one's tough because to me, it's just like it's just an obvious thing to me, right? Well, I mean, we kind of did have that, right? We had those videos where we talked about the empirical properties of markets and inelastic nature of markets and stuff. And from there, you can very easily see, well, these big traders, they move the market a lot and it takes time for them to execute. If you know that it's going on, you can front run it. You have to predict the order though. Being able to see that there's an order like that in the market, just from market data, hard to see that. Hard to make money from that. What do you think about crypto? I think that the cryptocurrency community has been completely invaded by hacks and scams and complete disregard for risk controls, other people, prudent financial investing. It has basically become a method to siphon off as much capital as you can from unsuspecting dupes. And I want nothing to do with the space right now. I hope that regulation comes in and regulates it into the ground, and that a government-sponsored stablecoin comes in and, gives us the benefits of a decentralized ledger that everybody can access and analyze, and everybody can create their own wallet so that you don't have to worry about a bank. Do all of those cool things. Get rid of all of this DeFi bullshit. There is literally just like Ponzi schemes everywhere. I hate it. I hate it with passion. It makes me so mad. It makes me so mad to watch a generation of people squander their wealth. It really does. You think that crypto has become what it was created to avoid? Yes, yes, and no. Yeah, I'm working on a video about bonds, actually. Weren't you here the other day when I kind of went through the outline of what I had? Are you interested because you want to help? I was just saying, like, the thing that I think I was doing wrong in that script, though, is that, like, the first thing that I need to teach is, like, okay, here's trading the bonds. Here are the instruments that are available via the CME. They're futures. They are not the actual cash market. Okay, they deliver actual futures. So there's different baskets that are available for delivery, and there's one that's called the cheapest to deliver, and that's what the yield. That's what the treasuries tend to follow. The way that it's priced is in points divided into 32. So the 30-year, it goes up to 31 and then goes back to 0, right? The 10-year, it's 30-second halves. So it goes instead of going 18, 19, it goes 18, 18 half, 19, blah, 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 blah. 31 half, 0. And then the 5-year is quarters of that. So 0, 2, 5, 7. But really the 302, it really is 3025, right? And the 307 is really 3075. Okay. And then the 2-year is divided up even more than that, right? And then I think that that's just the first video. I think the first video is just enough that they can pull the instruments up in their platform and they understand the price that they're seeing, and they understand that price is inverse to yields. Oh yeah, and then here's the yield futures. Then these are the inverse of it. And these are the on the run, not the cheapest to deliver. And that's it. That's all I tell them about it. First video. Second video is like, what is a bond? How does the Federal Reserve work and influence the bond market? And based off of that, here are the things that tend to influence bond prices. Why those two are what decides this cheapest to deliver? Because that sets the highest borrow rate in repo market. Well, yeah. So see, what you're talking about there is, I think, maybe video 3, but I don't know if it's worthwhile to make video 3, because I think that Mr. Gibbs at the CME teach that stuff much better than myself. And he does a webinar at least once a year on that sort of a thing, where you can ask this absolute expert on that kind of stuff questions about it. I think that that's a better solution for them on that kind of stuff, right? What I want them to know is I want them to understand what bonds are so that they can predict future order flows with it, right? So when we're talking about predicting future order flows, then we need to understand there are auctions, right? What are the reasons that people buy bonds? How does the Federal Reserve change the interest rate market, right? And when you kind of combine all of those things together, you kind of get all of this interesting information about what can predict future orders. And depending on how big that video gets, we can also go into like the general seasonality of bonds and that sort of a thing, right? So my video would be kind of more along those lines. And eventually, I think that we would want to make a video of that nature for all of the major assets to basically lay out a formula of these are the things, these are order flow predictors, right? These are the things that can predict future orders. Because what it is for oil is very different than what it is for treasuries, right? And what you need to understand and the kind of research that you want to get into and learn. Man, so there was this thread on Futures.io, by the way, where we were talking about how do you derive the correct 5-year yields based on ZF, right? And I thought that you could go in and you could use the DVO1 that's available there and everything else like that to basically make a calculation. You'd say here is when the 5-year was at 111, this was what the yield was, and this is what the DVO1 was. So now that we've moved up, if we move up to 112 or whatever, we should be able to estimate here. Here's what the new interest rate will be. And it doesn't work because the DVO1 changes. And I'm not sure if you can really predict how the DVO1 is going to change as it moves up, because it's based on a lot of things. So in effect, from the data, my conclusion was that from the data that we have, you can't calculate it. At least not close enough to try and do market making with. Right? And this person was like, no, because you can do this and this. And so like I actually like wrote it out. I was like, here's what we're trying to do. Right? And here's all the math that you have so far. But this doesn't work. And then like they didn't say anything back, which I think was kind of like he knows more than me and he doesn't know how to do it. So I must be the wrong track. Akshay probably knows more than me on those sorts of things though. But I don't know, when we brought this up in the past, I kind of got the same thing from him, right? That wouldn't tell us that really what we need to do is we need to get the BrokerTec data for the on-the-run treasuries. I really want to do that, though. I really want to get access to that BrokerTec data. The spread in the 5-year is just a little silly sometimes. There's some room to do some market making in the 5-year. Well, the Treasury broke the bottom side of the range there. And now right back up to kind of our liquidity hole. What does YTM stand for? Yield to maturity? DVO1 is itself calculated from yield to maturity. So unless you are on the yield to maturity, you are shorting in the dark. Okay, wait. So let's see if we can do that. It still is kind of an estimate, isn't it? I think I know what you're saying here. Let me see if I'm correct here. If we have that information, and so let's do it on the 5-year. So I think what you're saying is DVO1 is futures price divided by futures yield, right? So let's see here. 1/32 divided by 4. Okay. Oh, I should be paying attention here because we're about to get our consumer confidence numbers, right? It's a little late. No, that's not it. Another part for, whoa, what? Uses the value only for the first day of delivery, so you have to adjust for the accrued, which the underlying bonds will have during the quarter, and then take that out of the price. Ah, jeez, man. Can you just give me a formula? I want a formula. This market is so boring right now. Okay, so consumer confidence was 98.7, so it was a little bit under expectation, but not terrible. It does look like that is creating a little bit of buying in the treasuries. Not anything that I'm super anxious to jump on board. S&P 500 seems to be just taking it in stride. So here's what we need. We can use the information provided on this CME tool and what we get here on our DOM to equal current on the run yield. I'm sure it's a really complicated number, but can we actually, is that even possible? Because I don't even think it's possible from the data that we have. And it can be an estimate. Sure. But in order for it to be an acceptable estimate, it needs to be accurate within half a basis point. It has to be more accurate than half a basis point. Do we really need that sort of info for scalping? If you had that kind of information, you could probably market make in the 5-year. Make the IRR tables. You talking about that's something like internal rate of return? But I guess the thing is if you have all those tables, right? And then you input the information that we have on this table about the cheapest to deliver, right? You go through that, would you get an estimate as close as half a basis point? Right? Hmm. Okay, so let's change, because I think that part of where you're getting some of that stuff from is that it's the change from the on the run, from the cheapest to deliver to the on the run, right? So how about we change it like this? If we have the futures price and the DVO1, right? And the futures price has changed a whole point. What will the yield difference in the yield be? The futures DVO1, it gets you pretty close, but that changes. So is there some sort of convexivity? Like as the price goes up, the DVO1 will go up or down based on a certain convex function, right? And then that would be we could do that, right? Yeah, but I've checked it a lot of times. The treasury tool is always within 1 basis points of the cheapest to delivers cash implied yield to maturity, but it's always yesterday's settled price. Right. It's just not close enough. Well, S&P 500 doesn't seem to be liking that consumer confidence number, guys. And there was some pretty decent volume long in the treasuries off of that. Has come back. So these locations probably aren't terrible for a trade now. I don't know. That seems like a little bit of an overreaction, though. So I keep coming back to really calculate this, we need to see what was the last price of the on the run 5-year. If we had access to the on the run 5-year data, we could do it, right? So the question is still, what is the best, cheapest way to get that data? Because I've been having a hard time even finding it for retail trader. But even finding a broker that offers BrokerTec data, I haven't been able to find them. Convexity is duration. Every bond will have a different duration because each bond has a different coupon rate. Yeah, but isn't this duration right here the same thing as the DVO1, just represented a different way? It's not. You're not talking about this duration that's listed right here, are you? You'd have to calculate that duration from the coupon that they give you. Oh, you are talking about that one. So what would the formula be then? Would be the change in price divided by or rather the change from our anchor price. That's one thing is we got the change from price from this anchor, right? And then the dollar value of that in futures divided by the futures DVO1 should tell you how much the yield has changed, plus something to do with the duration. Or have you seen my formula? Have I shown you the formula? Well, they're still kind of chilling. They're coming back here 23. This is like as good as they get. 21, let's say. 3.21. 3.21. Probably the best we can get. I'm not too enamored by that. It's this one, right? Yeah, no, it's this one. Okay, so I get a double, which is the anchor price. And then I get the change. Much we've changed since that yesterday's closing price, essentially, right? And then change times, okay. Okay. Do you have a source for me where I can learn how to do that? I understand that we're trying to do something super complicated. So this sounds like a course or a book that I got to read, right? So where should I go for that? Is this something that maybe I would learn from the bond basis book? So the other book that I have about bonds that didn't have that kind of stuff in there. It was more about the yield curve. Anyways, so then I say that the yield change is, okay, so then the dollar change is this change times the point value of the instrument. And then you take that divided by the DVO1, and you should be getting the yield change. So if you do that for the closing prices and everything is zero at the closing prices, then you will get the correct yield. But clearly there's this extra bit that you have to add to it, right? When you say for each bond, do you mean do it for the cheapest to deliver and do it for the on the run? Steigum? Okay, let's see here. I'm just going to close that. Money Market Bond Calculations, first edition? Fourth edition? No, Stigum's Money Market. Is this it? On the run primarily. Okay. Well, the thing that sucks is that we don't get to see the price change in the on the run, right? We only get to see the price change in the cheapest to deliver. That's the one. Okay. Go find it. I'll go get it. Rather, might have to wait. I'm still on my Series 65 studying. Haven't been doing very good. Been slacking a little bit on that one. In the meantime, if you have find anything about the best place to get live BrokerTec data and the cheapest to deliver, in the on the run 5-year, that would be great. If you see anything, I cannot find a broker that knows anything. I've messaged like 5 brokers. The only complication for ZF is it has a new on the run auction every month. Yeah. Well, preferably we would be able to do it for all 4 of the instruments, right? Because the whole idea here is, where are we? Okay, so we've got like a 6 tick difference here in the 5-year. So if I can know that the correct price is closer to here, so that I'm okay to take an offer here. You know? And the thing is I don't even necessarily care if I get filled. What I care about is that this spread isn't so wide. If me coming out and putting my order forces the other robots to bring their spreads in to the point where all of the spreads are about equal to what we got in the 10-year, then we can start to get some yield curve trades, right? And maybe we could try and take the mean reversion in the yield curve that from the other study that we were studying over the weekend that you told us about, right? And we could see how well we do trading micro treasuries on looking for mean reversions in the yield curve. But first, we need a tighter spread because that's too wide to pull those off, I think. Interactive brokers, maybe? I don't know. I mean, I think it's going to be somebody that has trading technologies, that lets you use trading technologies, but the brokers that I talked to didn't know anything about it. For the micro yield futures, the question I am grappling with is they settle to an index that is implied by the on-the-run cash yield, correct. But the cash bonds trade with the accrued. Oh, yeah, but you can just minus that out, right? That's not too complicated. Yield to maturity is calculated using clean price, so why would any market maker come in when is slipping on the accrued every so often? Well, so here's the other side of it is, well, here's another thing that I think is weird about it, right? Is that the index only gets updated at specific times. I forget the exact times. Maybe we should go in and like find them and see, print them on the chart and see if the market like is actually wrong. I don't know. Because the whole thing is these robots that are putting orders out there, they're using something to figure out what they think the best bid and offer is, right? Yeah, it's only 4 times a day. Yeah. I mean, I assume that these guys that there's some firm out there, or maybe it's the exchange themselves. I don't know if they can do that. And they have access to the BrokerTec central limit order book. And they're using that to calculate these things. Yeah. Well, we got a good pop there off the news, but it come all the way back and it's still in the middle, and I'm still happy that I haven't taken a trade today. Right? Because basically all I want to do is do what they're doing and just put mine one tick in front of theirs. But in order to do that, I have to know which side is the side to make on. Which side the real price is closer to. And I don't even necessarily want to make a ton of money on it. I just want to bring the spread in. I want to bring the spread in so that when I take my yield curve trades, I don't have to pay up so much or worry about if I'll get filled on limit, right? So if I'm going to swing trade them, I'm probably okay to be able to take a market order if I'm only losing like 1 or 2 ticks off of a market order. But when you're losing a whole basis point off of a market order, when a basis point is like what I'm expecting to get out of an okay move just in the outrights, that's not going to work, right? We got to bring it in. In order to bring it in, it's just the problem is that it seems like we don't have access to the data that we need. So, by the way, that document or that study that you had mentioned last Friday that I looked at over the weekend relating to mean reversion in the yield curve. The thing that I found really interesting about that is that there is not actually all that much research on tendencies in the yield curve. Take the full TT suite, it's only $1,500 a month. But you still have to pick a broker for that, right? Who's the broker I need to talk to? Should I use Advantage Futures was who you were talking to, right? Maybe that's where I need to go. If the stream was making that much money a month, I would totally do it. If it improved the market. Call your buddies a Goldman. Okay, so here's something funny about all this. I went through. So where did I go? I was looking at, okay, who are their data partners? And the only data partner that I found was CQG. I'm like, okay, so you get CQG. So then I go to CQG and CQG is like, okay, we provide BrokerTec data. Here are the brokers that use it, right? But this is all old information. So I go to some of those brokers and they're like, no, we don't actually have it. Okay. But one of the ones that was listed on there, and it's like institutional clients only, JP Morgan. JP Morgan's listed there, and I'm like, okay, well, but that's institutional clients only, so I'm not going to bother them, right? Well, then I go on Futures.io, and there's this guy trying to figure, I don't even remember what he was trying to do. He was trying to figure something out, and he was talking to the JP Morgan guys. And he was kind of like, well, I'm a little confused because I didn't think that they would talk to me. And I think that I'm doing this wrong. And that's why he made a post about it on Futures.io. So I was kind of like, maybe I should talk to JP Morgan. I could talk to Goldman. I'd be like, hey, because I've seen them trying to hire for programming for interest rate stuff, and it'd be like, hey, look, I'll do that, but you let me be the market maker in the micro 5-year in the morning. Right? I'll bring the spread in for you guys. I'll take one for the team. Go and work at the big corporation. I can only do that. Wouldn't be doing my micro yield futures, treasury curve, mean reversion, CTA strategy. Right? So that you guys could do it. Bring the spread in. Unfortunately, I don't think I knew the right people to be talking to at Goldman for that sort of a thing. I know some good guys. You know, my boss, who I really liked and had a very good relationship with, is now the head of technology at Wells Fargo. I was like, what? I was really shocked. Like, the thing that's kind of crazy is you remember that David Solomon, who's the current CEO of Goldman Sachs, was the head of technology, right? Like, we kind of talked to this guy. I've spoken with him a few times. He knew who I was because we were both into electronic dance music, right? And now he's the CEO. I was like, what? I never in a million years thought that they'd take the technology guy and make him the CEO, but that's what happened. And he's been doing a pretty good job. No, I need somebody else, right? AMP is listed on TT's website. Yes, but what date? Well, we'll ask. I'll ask him. I'll say, hey, AMP, do you have access to BrokerTec data? And your guys were Advantage Futures. Wait, let's go here to AMP. No, not AMP, Trading Technologies. Enterprise Solutions. Mm-hmm. The following firms have signed on to provide access to TT. AMP Global Clearing. And all of the big guys. You could do Dorman and Phillips. Oh, which ones will provide BrokerTec? Well, let's see. Well, let's search for trading technologies, BrokerTec. Trading BrokerTec, hey. Look at that. Look at the thorough documentation we got here. Trading BrokerTec documentation. Oh, wait. Introduction to BrokerTec. Xtrader provides access to BrokerTec cash markets, including cash U.S. Treasury notes and government bonds on the runs. Anyone? Yes, but who are those ones? Which of the ones on this list that will talk to me? Because I know I could go to Goldman Sachs. I know I can go here and I can say, call them individuals. I don't know. They're probably not going to give me one, right? What I need, like, here's the problem, is that I know that when I find somebody that provides the access, that it's going to be crazy expensive, right? So we need somebody to take pity on us. We need somebody to go, oh, well, all he wants to do is bring in the spread on the 5-year. We could maybe give him a deal for that. Right? Anyways. No, we're over here. Market Explorer. MD Trader. Okay. Hmm. Oh, it supports icebergs. They have timer rules. That's interesting. Call any. Okay. So here's the thing. I was watching this video. I think it was I can't remember his name. He's a famous speaker guy that teaches people to be leaders at companies. Anyways, he was saying, "Oh, I see this all the time with the difference between male entrepreneurs and women entrepreneurs. They'll be in a meeting and this woman will have some business that she's working on. And it's relevant to the people that they're talking to. And he'll be like, hey, here's your chance. Talk to them. And she'll be like, we're not ready yet. Like, we're not done. Right. And meanwhile, the guy will come in and the guy will only be like 20% there and he'll tell them about it and be like, yeah, we're going to do this now. And just figure it out after they've told them about it. Right. So what Ash K is saying here kind of makes a little bit of sense. It's like, okay, call them up, tell them I have 100 million in an account, tell them what I want to do, figure out how much a month it will be to do all of this stuff, and then, find the funding afterwards. Yeah. Maybe that's what I need to do. Okay, none of those links there told me anything about who will support it, what broker I need. BrokerTec products are available in their own market segment at CME via dedicated iLink 3 sessions. Blah, 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 blah. Product definitions downloaded to TT from CME for BrokerTec contain market segment IDs so that you know which market segment gateway to go to. As an administrator and setup, you can configure the connection account and user settings needed for new or existing BrokerTec users to trade U.S. Treasuries on the CME. You can also set up existing CME users to trade BrokerTec via an iLink 3 session. Mm-hmm. Five-year on the run Treasury. BrokerTec. Brokers. I don't know. I mean, it's somebody on this list. So we can do something like, well, look, we can go to Phillips Capital. Features. Quick search. Yeah, you have permissions to post links. If it said to see me, I've probably seen it. Not too happy with the way the S&P 500 is going. I guess if they get down there, I'll take it again. It's kind of more of a swing trade here, though, with the Treasury. One that could turn very, very bad very, very quickly. Okay, so let's open it up over here. BrokerTec access methods. BrokerTec GUI. Yeah, so you can get it directly from CME. And then here's vendor partners, right? That's where I was looking. So this is how I did it, is I said vendor partners. And then I started going, I clicked on every single one of these. And, oh, look, there's CQG. Sort of, they don't do that. You don't get anything through there. So then you say, okay, CQG, BrokerTec, Exchange, BrokerTec. 195. Somewhere in here it gave us a list of people. And those are all PDFs and stuff. Somewhere on there, there's a list of like brokers for BrokerTec data through CQG. And I was like, all right, let's do it. Anyways, it was interesting to me because there's like so many on here that I'm like, I never heard of them. Ion Drink, that one's, I don't recall what that one was about. A lot of these are, quantitative brokers. Gosh. Oh my gosh. I'm gonna be really mad if Salim is right that QB is the best way to get it. I don't necessarily want to do that. Is he like here trading technologies? Transvic. See, I thought surely there's some small retail broker out there that provides trading in treasuries that would provide that would have this sort of stuff, and maybe it's one of these. I just don't know who. I just don't know who it is. Guys. Actually, we got to work on our network, man. There's people out there that know the answers to these questions, but we don't know them. And we need to find out. We need to learn who they are. We need to learn who they are and chat with them from time to time, you know? I'm pretty confident there's a way to do it, but I just can't find a way for me. Yeah, 195 a month is great when you get to know the standard lot and cash bonds trading is 5 million. 195 a month I could probably actually do. I could probably actually handle. So I also did message CME group, but they never responded back to me on those. Markets, fixed income, powerful solutions for interest rate traders. Well, I need to talk to them is what I need to do. Contact Chicago. No, I don't want to call them. I want to just email them. Yeah, right here. I fill that out. Seems like TT is the way. I need to. This is my next step. This is my next step is to just contact TT. Oh, what the? Coinbase won 0 trading fees, account protection up to 1 million, 24/7 priority support, and more for $30 a month. Oh, that's why they were getting rid of Coinbase Pro, huh? Hello, sir. I am having 100 million rupees in my account. Will you like to talk? Right. Finance major, what school are you going to? I would love to know. Are you at a prestigious school? You want to become the big trader? Sure, sir. What do you want to talk about? I want to talk about market making, micro treasury futures. Oh, yeah, we don't want to talk to you. Like, this is the thing. There's got to be somebody at the CME that is like, hey, we'll talk to you, Seth. Listen, CME, if you're out there, I'm your guy. I'm the only retail trader that gives a shit about this stuff. Seriously. Seriously. I'm not saying I'm the best. I'm the best retail trader for this or in the fixed income space or anything like that. I'm just saying, if you want to bring in the spread on the 5-year treasury yield futures, micro treasury yield futures, I'm your guy. Let's work something out. You could give me the data access. I wouldn't risk very much money. I would just bring the yield in. I would just put orders out there that I felt had almost 0 chance of actually being hit, but would be bringing in the spread more than what these market makers are doing, so that people can actually do with the micro treasury yield futures what you intended. I have a big idea. Go. I get what you're saying. I shouldn't. When they say, "What would you like to talk about?" I shouldn't say, "Well, I want to talk about micro treasury yield futures." Then no, that's not what you do. What you do is you say, "I've got a big idea." Well, what's your big idea? Well, you know that there are mean reversion behaviors in the yield curve, right? Well, we think that we can take advantage of those. And, we're going to make a CTA fund for it, which tends to return a return equal to, the market, 7% return on a year, but it will be more diversified, more consistent, yeah, it was a good opportunity for your clients. And yeah, we're going to use micro treasury yield futures to do it. Right. Don't worry. At that point, we'll become a member. We'll get cheaper commissions. The commissions won't be a problem. Okay, guys. We'll figure that out. Like, you don't even have to connect me to the guy. You just have to tell me the guy's name so I can start stalking them on LinkedIn. Right? Well, Treasury's falling out of favor here a little bit again. Spoo's pushing 3,900 again. So I'm concerned that might not be support, right? The guy I knew from the Lloyd's days is retired and grows weed and Okay, so like here's a thread that I came across on Reddit. What are some jobs that suck when you're poor, but are awesome if you're fat fire? Fat fire means fat, fixed income, retire early, right? The guy that picks up the balls at the range on that tractor thing, and then you just golf afterwards. Unemployed. Oh, perfect. Yes. Gardener. What? No. Listen, maybe that's nice where you live, but it's hot outside. Working at a pet store or a garden. Yes, that's what I want to do is run a pet store. My wife would be so happy. She loves pets. She loves the animals so much. Scuba instructor, personal trainer, counselor, teacher, pretty much anything that gets to feel good about making the world a better place, but the pay is garbage. Is the pay to be a personal trainer really garbage? I thought that you could actually make a ton of money as a personal trainer if you get the certain, clientele and stuff. Photographer, if you're trying to make as an artist, it's terrible. But as a hobby job, it's, oh yeah, I bet. I always wanted to be a postman. No, you have to walk outside where it's hot and there's pollen in the air. Man, I have just become so anti-outside now. It's sad. It's so sad. Owning a classy cocktail and craft beer bar. Oh, man. So far, I don't know. These jobs sound better than growing weed. Growing weed sounds like a lonely job. Running a banana stand? What? That's a thing? Maybe there are I don't remember seeing banana stands in New York. Well, now they're just getting into normal jobs. Car mechanic, okay, yeah. That's just a normal job, dude. Barista, like, no, that's just a normal, no, I don't, nobody enjoys being a barista. Do people enjoy being baristas? I don't think I don't. There probably is. There's probably somebody on YouTube that's like, it's such a rewarding life being a barista. I wish it paid more, but it's okay because I'm a millionaire on YouTube. I'm sure that channel exists. You never know. I've heard of it. A math teacher. Have fun with that, dude. The schools are all screwed up, man. Oh man. I want to talk about my kids, but I don't think I should. I can just keep my mouth shut about that. There's all the schools are an effing mess these days, man. It was a mess when I was a kid. The junior highs now are really messed up. Yeah. Hmm. Russian billionaire Deripaska doubles down on Ukraine war criticism. Trump moved more than 1 million from his political groups to his private business after losing. Is that you're allowed to? I don't think you're allowed to do that. Don't forget that you can follow the live for free on the. Wait, what? Really? Oh, that's why I followed this guy. I think I need to drink more water. My throat is getting really dry, and that's making my voice terrible. Well, with the S&P 500 falling here, it seems that Bitcoin is taking a pretty big hit too. Hmm. Oh, wow, it does. This is really good. You have Forex Live, Capital.com. You guys give this a look. I think that I followed him originally because he was building this and now it's out. It looks good. You might be interested. I'll give you a link here. Let's check out Zero Hedge here, eh? Consumer confidence crashes in June. Richmond Fed survey plunges to COVID lockdown rolls. Oh, you know what? I kind of missed that. What was the Richmond Fed? It didn't update on my thing. Ooh, it was -19 versus a -5. Curious. So that might explain why we did see some acceleration upwards in the treasuries after that news. And yeah, that was definitely the turning point for the equity indexes. But then the treasuries have kind of fallen down for no apparent reason. So I don't know. It still looks to me like not the best day for trades in the treasuries. I don't know. Tomorrow we get better stuff, right? So tomorrow we might get more movement. Now, if you have to pay taxes on your winnings from trading, then you're profitable. I guess I'm profitable. Not in the futures, but I was profitable last year, right? Let's reset things. So I think at one point I said 2.21. Maybe $10 off of it. But clearly the other direction was a better trade. Actually, the other direction you could have made $40 if you got the right price. You would have had to have been selling the strength for sure. And it was a long hold too. This doesn't really look to me like a strong meta order per se. It's a pretty slow and gradual move. 6J seems to be taking some pressure here. So that could be good for selling. Cryptocurrency is not looking happy. Well, guys. Quiet day. But that's okay. What should we put for today's title? Man. And just put digging for BrokerTec data. I would like to use my 100 million rupees to buy a 1-bedroom home in Los Angeles. I can't. You're funny, my finance major. I could come in. We'll be back tomorrow. That's what I'm going to say. Digging for BrokerTec data. Maybe somebody will see that title and take pity on us. I will see you guys tomorrow. In the meantime, stay profitable, or at least Don't lose it all. Yeah, there's a lot more to come later this week, so